If you're constantly chasing trades or seeing a fair value gap or an order block and not really knowing exactly what to do, then this is the video for you, because in this video, I'm going to share a simple 3-step process for catching reversals on the lower time frames, and it all has to do with high time frame context. So I'm going to show you 2 reversals that I caught this past week and exactly how I did that. So if you're new here, my name is Justin Bennett, Forex trader since 2007, full-time trader since 2011. And as always, all of this is my opinion only and not financial advice. So let's get into here the DXY 15-minute time frame. So these are the reversals that I caught this past week. And I'm going to show you guys proof of this because I know how this goes on YouTube or any social media platform. When you start talking about catching, tops and bottoms, everybody says, yeah, right, you didn't catch this. Okay, but I'm going to show you proof of this here in a moment. But this first one here, this first bottom on the DXY 15-minute time frame, you can see where this is actually a pattern. I made a full video on this this past week, which I will link to in the description of this video. So be sure to check that out because this right here proves that this stuff works. You get the low here, you get buyers stepping in at the lows and setting their stop losses below here. Now you then get the market sweeping those stops. And this right here is where buyers or large buyers are potentially buying, but you don't have confirmation of this until you get a close above the high up here. So acceptance above. So it's a 3-step process. So 1, 2, 3, okay, closing above. Now this right here, okay, all 3 steps are required for this. I had some people in the comments saying, well, you don't really need this part right here. You just need acceptance above the highs. And you do need this part because this clears out the stops. Okay, this clears out that liquidity that builds below lows like this. And again, this is your early warning sign or early signal that large buyers are stepping in. You don't have that confirmation though until the acceptance above the high. So all 3 parts are necessary to trade this. And this works for both tops and bottoms. Okay, so that's the first one there. The second one that we caught was this one over here. So again, you have the DXY pulling back, lower highs and lower lows on the 15-minute. Then you had a BOS here. So if I move in, you can see where we got the close below this low over here. Okay, so simple little shift here in the market. Okay, so close below right here, and then we had the close above giving us that change of character. Now, the other thing you'll notice here is that we did get displacement out of this, right? We had a fair value gap form off of this break, and so this was textbook. Okay, so very simple, very, very simple. And despite the fact that both of these look different, okay, this one over here is more of a liquidity sweep reversal. This one over here, we had a, change of character following the BOS to the downside. So despite these being very different, they had one thing in common, and that's what I'm going to share with you here in this video. Now, before we get too far into this though, I do want to show proof of this because again, I know how this goes if I don't show the proof. Okay, so this is where I share all of my ideas throughout the week. And this one right here is the one that I shared a few days ago. So this was the very start of the week. And this right here is that first low we just looked at. So what I told members in Discord was to watch for acceptance above here. And I literally told them that this right here could confirm that buyers have taken back control. Okay, now again, this one here, and by the way, we caught the euro top as well, the same thing with the pound. But what I want to show you here too is this second one on the DXY, this one here. So I said DXY potentially returning to the highs, 15-minute bullish shift. So this is that second one that we just looked at, right? We had the BOS below, we had the change of character, and this ended up being the bottom for the dollar as well. Okay, so we know that these patterns can be effective, okay? And I want to be clear too, I'm not showing you this for a flex, I'm not bragging, but I know how this goes. If I don't show the proof, everybody says, yeah, right, you didn't catch this stuff, you didn't trade it. But I did call this stuff out in real time. And so both of these right here, the one thing that they had in common, despite the fact that they were different setups, was high time frame context. Okay, so if we go to a 1-hour time frame, we know that, and this is the simple 3-step process that I'm going to show you here. So if you're constantly chasing trades and seeing moves pass you by and you don't really know exactly what to do, this is what to do. Okay, and this is not financial advice. This is my opinion. I'm literally just sharing exactly what I do on the charts. Okay, and it's nothing, it's not rocket science. It's nothing special. It's nothing, super complex. It's all very simple. So looking here, we have the DXY in a downtrend. Now back here on the 1 hour, we had the close below this low back here. So this was acceptance below the low. This also gave us a break of structure to the sell side. Now, as soon as we had that, that told us that this up here was our external high. We know this is external or protected because we had the market, first of all, sweeping internal liquidity, right? Giving us this high up here. This was the high that gave us this BOS. Okay, so very simple, right? So once we have that, we know that any acceptance above here is a change of character. And look what we had right here on the hourly. We had a close above. Now, this was not a large close above. Okay, it was 98.75 up here to 98.77, 98.78. So very, very slight. But this right here is enough to show acceptance above the high. Okay, so this is step one. Step one is map directional bias. Okay, so map directional bias, and I made videos on this before too, how to use BOS and change of character and all that to do this. Okay, but this right here is going to be the first step always, and I prefer the 1 hour time frame. You can use whatever time frame that you want. I do find the 1 hour time frame though to be a nice blend between giving me that kind of higher time frame conviction, but low enough to the point where I do get enough setups every month. So you can play around with this and use whatever you want. I find the 1 hour to be really ideal for this. Okay, so step two now. Let's talk about step two. So step two is identifying these areas of interest. Okay, so an area of interest can be many things. Okay, and I've talked about this before as well. It can be fair value gaps, it can be order blocks, it can be OTE, it can be highs and lows in the market. And so in this case here, following this change of character, okay, and we're not specifically looking at this low down here, but you can see where this too was considered an area of interest because we had the lows down here. Now, full disclosure, at this time in the market, and again, this wasn't the past week, this isn't the low we're talking about in this video, but at this time, I was actually looking for a move down here into this area, okay? If we had gotten a sweep of the lows, a move down here, and then a low time frame shift, that would have been perfect. But we didn't get it, and instead we just saw the market test the lows and then bottom from here. And what you'll also notice too here is that this was also a very similar pattern on the 1 hour time frame here. Okay, you can see that we had the lows back here. We had the market sweep the lows. We then had acceptance above this high. Okay, so same exact pattern over and over again. But the key here is higher time frame context. So we're not just looking at a 15-minute or a 1 hour time frame and just looking for these patterns and hoping for the best. We're outlining first directional bias. Okay, so step one, directional bias. Step two is going to be higher time frame context. Now I'm not going to say high time frame context. I'm going to say higher time frame context. And it's very slight, but what I mean by that is that you don't necessarily have to go to a daily or weekly time frame. All this has to be is higher than the time frame where you're looking for the shift. Okay, so in this case on the DXY, we were looking at the 15-minute time frame. So the 1 hour time frame is a higher time frame context because it's higher than the 15. Okay, so in this case, right, this down here, this low was off of these lows down here. So that's your higher time frame context. So in the case of the two reversals that we're looking at in this video though, you can clearly see that this area back here, right, we had the market breaking out highs and then lows. Okay, so very simple. The market shifted from finding selling pressure up here and it broke above. We returned to it right here. Now this was that first low. Okay, so this through here, this was that first 15-minute shift that I looked at. Okay, so this right here, if we look at the hourly time frame, you can see it on this as well. Okay, so off of this low right here, we had the sweep below. We then had acceptance above the high. And that's all this was. Okay, it was a simple shift in the market where we got that liquidity sweep reversal. But again, the key here is the higher time frame context. Okay, you have to pair the two together. When they align, you're going to find some really high probability reversals in the market. Okay, so that's our first low right there. And again, that ended up being the low for the US dollar that I also called out in real time in Discord. Now, the second one was this area over here. So we had the move up here toward the highs. A pullback was likely considering we're looking at resistance up here like this. Okay, selling pressure coming in, and we got a return here to the lows. Now, why was this an area of interest? Okay, a little less obvious than this first one over here with the highs and the lows. But this one through here, what you'll notice on the 1 hour time frame is that we have a lot of consolidation through here. Okay, so first of all, we have these highs over here. We then have all of this congestion through here. Okay, so what I'm specifically referring to is you can see that we have the high back here. We have consolidation through here. We have consolidation again, and then this is where we bottomed. So again, this is a higher time frame, key area. Okay, so it doesn't have to be just simple highs and lows like in the first example, but this also is a higher time frame area. It's higher time frame context to where now I have an area outline where I'm saying, okay, if the market is going to bottom here and come up here and challenge the highs again from this area, it's probably going to occur from down here in this region. So from there, all I'm doing is dropping down to a 15-minute time frame like I showed you here to start, and then this was that 15-minute shift from that area. Okay, so if we go back to the 1 hour time frame, the 3-step process looks like this. Okay, where step 3 is going to be a lower time frame shift. Okay, so that's the shift that we looked at on the 15-minute time frame, where again, both of these qualify. Okay, so this first one here, you can see liquidity sweep reversal. Very, very simple. We had stops building below the lows. We got the sweep here. We got acceptance above. That became the bottom. But again, the key here is that I'm not just looking at this randomly. I know that this area over here is going to be those previous highs over here. Okay, previous highs. And I know that this is going to be an area where the market could react. And then I'm just dropping down to a 15-minute time frame and watching for that confirmation, which we got right here. Okay, so that was the bottom. And then again, this one over here is, you can see it even here on the 15-minute, right? Notice all of this congestion through here, once again over here. So on this pullback, I knew that this region through here was the one that I wanted to watch. You know, not up here, down here in this area. And so as soon as we got this 15-minute break of structure and change of character right here, that was my clue. That was my clue in combination with that higher time frame context that we were likely to get a reversal, a bullish reversal from the US dollar. Okay, so really nice stuff here. I mean, really, really clean from the US dollar. And it's really that simple. I'm not going to make this video, you know, half an hour long because it doesn't have to be. It's a 3-step process of map directional bias, right? We knew that back here, again, we had the BOS to the downside. We had a bullish change of character on the 1-hour time frame. So this right here meant that going into this week, I was only looking for buys. So that's step 1. Step 2, higher time frame context. Where is the market likely to react? And you can see right here, following this move right here, where is the market likely to react? And this is real time. But if the market's going to react to somewhere, it's going to be this area down here. We have some fair value gaps down here. So this is potentially an area to watch now for a push higher if we hold it. Okay, if we hold it and show 15-minute lower time frame shift, then that too could potentially be a new bottom for the US dollar. Now, this isn't about calling out stuff in real time. That's not why I'm making this video. But the point here is that this is just about identifying higher time frame areas of interest, and then you're just dropping down to a lower time frame to watch for that lower time frame shift. So very, very simple, but that combination is going to help improve your trading immensely. You're no longer going to be going into weeks and days wondering what you should do or watching moves pass you by and not really knowing exactly what to do because you're mapping this out ahead of time. You're mapping this out at the start of the week, at the start of the day, so that you know exactly what to watch for. And then all you are doing is just stepping back, staying patient, and waiting for the market to come into these areas and then watching for that low time frame shift. And just that simple 3-step process is, again, how I was able to call this bottom on the US dollar and this bottom here as well. So if this video has helped, be sure to subscribe to the channel, keep it locked in here, and check out this video right here where I talk about specifically how to trade those liquidity sweep reversals. Until next time, trade well out there.